please read this disclaimer carefully before proceeding further. Welcome traders to this week's update on DXY dollar index. My name is Vic. What we saw last time is that the market was moving higher, and this was the level which we were actually expecting to hold 90.99. But remember, because the market has already been bearish in here, we were expecting at least 1 month to be bearish again, one candle to be bearish again, and we were expecting that to happen in January, but that did not happen, and it is now happening in February. So what's happening right now is that February month is most likely going to end as a bearish candle, which is actually a good thing, because depending on where this month closes, where this candle closes, we will probably have a bullish candle on DXY in the month of March. This rejection from the top cannot be ignored, so that means that whenever the price will start to go up, it will now have even bigger of a resistance to actually move upwards. So we will have to keep this level as well in our checklist, because now a lot of sell has actually happened from that level. So if the market goes back up to that, there can be further downward reaction. However, if we go back to the weekly time frame, what do we have is that these two yellow lines were very important, and market was supposed to hold this 90.991, but it has not been able to do so, even though it reached this level and then fell back down. Now it is expected to hold this 90.273. If the market goes below this, if it starts to break through this and closes below, then we are looking for further downward movement, which I'm not expecting at the moment. Even if it actually goes down, then I'm expecting it to fall down to something like this level here. Let me change the color of it. Something like this, but I'm not expecting huge downward movement, because this is already telling me that market is ready to go upwards. It's just taking its time because it has been heavily bearish. So there will be some period of consolidation, sideways movement, which it has already gone through, and this was the breakout. Now it is coming back to retest that consolidation, and most probably from next month onwards it is expected to go higher. So dollar can be bullish. So far it is holding this level very nicely. This is what we saw I think a week or 2 weeks ago, and this is holding very nicely here. And what we have now, if we just zoom out and see, that market is probably going to create a W pattern here. There was a W pattern, and that's why it has started to fall down, but now we have another one. If the market starts to go upwards from here, then this is the level that we are looking at, 90.933, and after that we are looking at obviously that level where the entire selling off actually started last week. And then we are obviously going to look at these FCP zones, and once the market has reached this zone, then we will have to update this analysis, because at that moment in time we will have this formation of W pattern here, pretty much like this. So something like this around here. So we will have to see where it is going to go to, but for now let's see if it actually holds this 90.23, and even if it breaks through that, then 89.90 or maybe 90 level is something which it can revisit. 90 is it can be psychological number as well, so 90 it can come down to that, but I'm expecting it to hold 90.273. So let's go and look at the 4-hour time frame. On 4 hour there were several reactions around that level, and now market is probably going to create a W pattern here as well. If you are not able to spot them, then this is probably going to be something like this, which will take it to this level, which is an important level, and once the market has gone through that, then only we can expect further movement upwards. So this is how it is looking on here. Let me bring in Vata and Visage as well. So on Vata and Visage, what we can see, that market is on monthly time frame, the market is it's still bearish here, and this Vata curve is also saying that it is bearish. And if the market starts to move upwards, then this is the target, Vata curve access target, so 95.3, near about that. In fact, actually let's put it around here, so 95.3 yeah, near about that. So if the market starts to move, then this is the target that we can achieve very easily, because whenever the price goes away from water curve, it comes back to it. You see, the when price goes away, it comes back to it, goes away, comes back to it, goes away, comes back to it. So at the moment it is further away from the water curve, and it is expected to go back to that level once again, at least once there. So that's what we're looking at, and the lowest level that February month can come to is near about something like 89.5, not the lowest of the low, but here 89.53 level, approximately that level it can reach to, but I'm not expecting it to close beyond in February month. So that's what we have on monthly time frame. If you look at the weekly time frame, market already gave a bullish signal, and this has reached its profit target right there, which is 91.449. so this was very good. The color changed from red to blue, and then we had a signal which took us to 91.449. If I go to the daily time frame, on daily time frame, this is the profit target, along with weekly target. This has reached profit here, and now we have bearish target here. Now if the market starts to fall, then this is the target. You see, this is already like, pointing around the same zone, same around the area, which is this level, 89.539, near about that level. If it starts to fall down, then it is expected to reach there. You see, the market is still bearish, as what a curve is saying. It is still bearish, so they can be fall back down in there, and so far it has not been able to close above the water curve, which also says that it is still little bearish here, and there can be further movement down. But as we saw here, if this level holds, then we can expect bullish movement. So if it breaks through that, then we are looking for further downward movement only after that. So let's see how market opens around here, and let's see how it actually reacts to these levels, and based on that we will start to formulate our trading plan. Let's go to the 4-hour time frame and see what has been happening. On 4-hour, the market came right into water curve, which acted as a resistance and then started to fall back down. So this is how water curve works. It acts as a support and resistance. If the price is too much further away from it, it is expected to come there, and this target was properly reached. So if it keeps on falling, because we already have this signal here, then 90.112 is another level to watch out for, which is also near about the same profit target as the before. So these are the levels that are important to watch, but pay attention to what the market is telling you on the higher time frame, on the monthly and weekly time frame. Okay, because always remember, higher time frames work best. They are always the ones who are actually driving the entire market. If you just focus, if you have like narrow focus on 1 hour or 4-hour time frames, then you might get lucky at times, but the best thing is to do multi-time frame analysis. So always pay attention to daily, weekly and monthly time frames, right? So this is our analysis for this week. Hope you enjoyed this. If you did, hit the like button. It helps us a lot, it motivates us a lot. So hit the like button, and in the comment section below, let me know what you think about this analysis and what is your opinion. If you have anything to share, if you have any question, put it in the comment section and we'll try our best to answer that. And I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.